The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends. And what do we have today? Well, we're off 4 on the S&P after being up a little bit. What else we got going on here? We're down 18 on the Dow. Nasdaq's off 4 after being up a bit. And this is kind of a typical pattern that we see in expiration week, which is Wednesday up, Thursday down, Friday back up to the previous highs. So 80% of that time, we pretty much follow that pattern. This being triple witching, going to be probably a little bit that and more so. What you look for today is if today's going to be the move, and then tomorrow is going to be flat, you look for a lot of volume today. We do not have that 1.9 billion shares so far. So fairly quiet day for Thursday before quad witching. That would suggest that we're probably going to have a lot of action tomorrow, both up and down. By the end of the day, most of the time we're going to be higher than the close today. And that's pretty high inference. But again, that other 20% of the time, mostly very different. I would suspect from watching what's going on, huge amounts of puts being sold today makes me think that those folks are probably wrong. And the idea is to watch highly shorted stocks for tomorrow for a big bounce. What else do we have going on here? Well, we always come to you at this time each day.
The following takes place between 2 p.m. and 3 p.m.
Do we catch him asleep? There he goes. He nodded off today. So we're looking a little pullback. We expect probably, if a stock pulled back a little bit today, look for it to rally back up probably to the highs of Wednesday, at least, if not the highs of today. So if you're really looking for any kind of movement, my guess it would come next week. Little of this movement happened because the Speaker of the House said he's going to give up his position. I don't think it was so much give up as the fact that he knew he wouldn't be able to go through yet another re-election to the Speaker of the House when they meet in January. So just kind of saying that would be it. Made too many enemies by trying to please a lot of people in the Senate, and don't think that that's just going to work anymore. At least his party wants some people out there that are ready for all-out war. They don't want conciliatory type folks running the show anymore. And, I guess there's two ways. There's a lot of people get very used to being out of power. They get into power and they don't quite know what to use and do with it. And at least some people would think that's exactly what the problem is with the Republicans if they are cheering that side on of the aisle. We've got some other stuff. We'll talk about net neutrality. Had some emails, got some other emails too. We'll look at my opinion on that. Nothing more than an opinion. I don't know how you write down any facts on it, but we'll talk about that in the second segment. And is there a whole lot more? No, it's option expiration. We were up yesterday. We're down a little bit today. Look for us to go back up to at least the highs of tomorrow and maybe even a little higher tomorrow with quad witching going into Christmas. I'd be sitting on my hands if you had some out of the money calls for tomorrow, or we're buying some of them for today. The window for getting in and out of those is incredibly narrow, though, so keep an eye on that. As always, we like to start the show off with a little bit of history.
And it's all just a little bit of history repeating.
It is this day in 1902 when the cable ship Silvertown begins laying the first trans-Pacific telegraph cable from San Francisco destinated for Honolulu, Hawaii, and then Japan and China. After laying 2,227 nautical miles of cable, the Silverton will land in Honolulu on January 1st, 1903. Public messages will begin transmitting on January 5th, and of course, communication is always a bugaboo because it's huge amounts of infrastructure, and probably why we're talking about net neutrality today, what it is and what it truly means, and the unintended consequences, why it's being rolled back today. So we'll talk a lot about that in the second segment out here. But, 1902, it was a pretty small world. We talked the other day about how many things that people in 1902 didn't know that would exist today. There'll be a lot of things even just a couple of years from today that we had no idea of, although we tend to spend a lot more time in science fiction now. But even in 1902, they had 20,000 leagues under the sea, a submarine that ran on some kind of magic power that could run for darn near forever. Who would have thought that nuclear power would come along by 1951 or 2 and have subs that could literally run for years without refueling? Well, we always don't know what we don't know. And I don't know what I don't know. You know? Well, anyway. Most interesting to most people today is the GLD in gold, at least around the TFNN homestead. I thought that we had some fairly good signals. I sent some charts to Larry Pesavento, and he showed them on his show. And we did a few of them yesterday. But from, the indexes, kind of interesting. To me, it was most about the miners and the charts that you had in the miners, like Gold Corp. Love these tests that came in with like half the volume of previous lows, and you're not giving a lot back. And I guess everybody's worried that you didn't have yet another candle like you had yesterday. These things can take 2 or 3 or 4 days. You even get a little bit of a pullback, but generally you get a pretty good low when you test it with half the volume. And in the case of Gold Corp and others, and Gold Corp, December 15th, $11.89 in 2016. You had 14.4 million shares. And of course, a couple of days ago, 1164 went below it, closed above it with 8 million shares, which is exactly what you're looking in a Wyckoff pattern. You had exactly what you wanted, a huge run with huge energy up to this high on February 16th of this year, and a nice slow give back of all of that back to the low. You test the low on lighter volume, and Wyckoff would say that's where you want to buy. So to this point, you got a clear and defendable position if you bought gold yesterday. But these are the patterns that I do like. Over time, take a long time to develop, this one a year, and looks pretty good to me. So don't spend a lot of time on the metals, but the chart looks pretty good. So I go where the charts point me. The sector looks very interesting. We'll be back after that.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
War, but 1967? I'm going to bet that's probably pretty close. What do we have? We're talking about net neutrality. Got a question in the den, but I was going to talk about it anyway. I had a lot of emails. Of course, ostensibly, net neutrality is that all packets would be treated the same on the internet, whether they were video or audio or an email. And on the surface, that is exactly what I would love to see. The problem comes in with the implementation and politics. So in theory, a great thing to have. In practice, it means that who picks the winners and losers out of this shifts from Google, Facebook, Amazon to the carriers and the ISPs who have a little bit more discretion about what's going on and how those packets are handled. First of all, whoever is in favor of net neutrality may have picked the absolute worst morons to explain it on TV. I heard this morning. If you send a package by UPS, they don't treat it any other way depending on how much money you pay. And I thought, guess it's another brain donor who doesn't know he's doesn't have a brain anymore. I can send stuff 2 day, 1 day, ground. There are lots of different ways I can pay for my package to be handled very differently depending on the way it goes out there. So they explained it poorly and had morons explaining it. They also had a lot of whack jobs, not only on the left, far left, but on the far right. Everybody sees this as a big conspiracy. The reality is that the swamp in Washington, D.C. has more than been vocal about using this to punish people that they do not like their speech. Now, is a speech saying go kill somebody? No. This is the exact same thing that we had in 2011 when the IRS decided in its wisdom in Cincinnati that it was going to hate on the Tea Party guys. Amazingly, you don't hear anything about that, but the last news out of that is they're trying to keep all the testimony private because the people that actually did it, and boy, did they do it. The judge says he has yet to see somebody this amazingly guilty based on the evidence. But guess what? They want to hide all that because they're sure someone's going to try to kill them after they found out what they actually did. All the testimony to this point has been in private. That is the problem. You may have something that's great, but the unintended consequence is you have some filthy Nazis in the IRS that decide that they don't like your particular free speech. You also have the swamp that wants to sweep it under the rug because, guess, they get all their money from the IRS, taxing people, and they wouldn't have any power if they didn't. So both on the left and the right, they wanted to sweep that IRS Tea Party thing under the rug and have done a pretty good job. Unfortunately, just like the Affordable Care Act, we found the guy that wrote it coming out and telling everybody exactly what was in it. And for the most part, everything that everybody was saying was untrue about it when they were trying to get it passed. You can always check YouTube and find the guy and find his congressional testimony and his original speech in front where he told everybody just that. Well, we have the exact same thing in happening in net neutrality. These people, especially the two that voted for net neutrality, or the carrying on the policies the last 2 years, say how that they wanted to use it to actually squelch free speech. So me personally, I'm okay with today. It's the lesser of two evils. Ideally, it would be fine. Unfortunately, in everything, in a world where everything is highly politicized, these people want to use it as a gun to kill others' free speech. And that is a bigger crime than maybe Time Warner slowing down your video tonight for Netflix. Now, the question is, yeah, the devil's in the details. And there are a lot of people that, one, don't understand it, and two, want to use it for evil. And that's my biggest problem. Now, what difference is this going to make in the stock market itself? The people that use high rates of data, i.e. the video streamers and TFNN, are probably going to be the most affected. But the question is, how affected are you going to be? I buy the highest data rate possible in my area. I'm unaffected compared to a lot of other people that buy mid packages or the low end packages for the internet. They're not buying a big pipe. I buy the biggest pipe available in this area. And maybe that's what you're going to do if you want to watch it. But Netflix, first of all, has already made deals with almost every one of these folks, the Time Warners and Comcasts of the world. Not only have they made deals in your local city, there's going to be a big, huge rack of boxes. And that rack of boxes has every movie from Netflix. When you stream it, 75% of the movies that you will stream literally come from your local office and don't go across the broader internet, certainly don't go across any broadbands. They are actually streamed from your local office. They have a big box there that has all the movies on it so that they don't have to ship it across country or go across backbones that may or may not be out of bounds. Some people believe this gives Netflix a moat, i.e. other people would have to pay up to let Comcast and Time Warner and other broadband service providers have those boxes locally too. So when you talk about Netflix having a possible advantage in the market, they do have that advantage. It hasn't been a problem for me, for others that do not. But Netflix at its scale, including Amazon, has the kind of the equivalent, but Amazon's already bought its own pipes to every city. So they're actually even integrated at a level above what Netflix does. But I don't have any problem really streaming anything ever. But the question is, do you want to pay $80 a month for internet service alone, like I do, or do you want to pay $25? Certainly in England and Europe, it is a much lower price, but you pay the fiddler there in free speech. England can label you a hate crime provider if you say anything that Mrs. May or some of the other MPs in England don't like. I personally would rather spend a little bit more and make sure that they aren't molesting free speech rights. So maybe someone else has some, maybe somebody else has some other ideas or questions about this, or maybe even question my thesis out here. But a lot of times it's not, there's one great decision and there's another great horrible decision. A lot of times there's a bad decision and even worse decision. And today we had the bad decision, not the even worse decision that would make life on a constitutional scale much more problematic. But those two people that voted for it today have already said what they would do to molest free speech. So I don't have any problem with the final decision today. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And have an email out here that actually asks So, in my thoughts about cobalt, we talked about that last week. There have been a lot of ads running, and again, these ads are paid. They aren't just people giving their opinion for the good of all. Those ads basically say there's going to be no cobalt. Cobalt's gone. Cobalt, new cars, new electric cars, going to make cobalt worth $70 billion an ounce. The reality is that there's a little bit of truth and a whole lot of blue sky in those articles. The truth of the matter is that a lot of the cobalt today comes from the west states of Africa, and they're not the most politically stable of all of them. The lie is that you couldn't find cobalt elsewhere for a slightly higher price. Slave labor down in that area of the world is fairly cheap for miners. And of course, the EPA does not exist. So if you add to those few things, cobalt would be more expensive. And of course, and in the future, my guess is that we're going to see many new miners get very interested in mining cobalt. Many of these products are what they call rare earths, and it doesn't mean that they're rare. All it means is that they're rare in high concentrations. It's just like gold. How many tons do you need to take out of the ground to actually get an ounce of gold? Same kind of thing. How many tons of stuff do you need to dig out of the ground to get some cobalt? And if you have a place that's 5% cobalt and one that's 4% cobalt, how much more expensive is it? Well, it's really a lot more, and that mine can put you out of business just by producing enough to meet demand. So if these guys went out, would it be, is it, this place got 5% cobalt in the ground where the next one has 4%? That's kind of what we're looking at. So would cobalt go up, and can it go up? The answer is yes. Is it anywhere close to the pump and dump advertising that I've seen over the last couple of months? No. So just be very careful. There's a lot of huge lies being told, and the best lie, if you believe the Soviet secret police, has a little bit of truth in it, and that's what this comes to, is there's some truth in it, and then they tell the whopper on the back end of it. Okay, another question out here, I guess. Okay. I'm switching from DirecTV to Xfinity on Monday. The new Xfinity Comcast boxes come preloaded with the Netflix app, and that's right. But, of course, those people have already made that deal. A little less important is Amazon, who has servers in, I think, all 50 of the major markets, which takes up, I think, 72% of all the United States lives in those top 50 markets. So I think they got it pretty much covered too. It's anybody that wants to come in. And my guess is that Disney, of course, with its streaming environment, will be the next one that has to pony up. And of course, they're buying more content. So you're going to have 4 or 5 big content companies, and they're going to have to go through at least some level. They're going to have to cross the palm with a little bit of silver. Wet my beak, as the gentleman of the 5 hands said in The Godfather. Just let me wet my beak. Well, certainly that's what it's going to be. You're going to have to wet your beak if you want to have huge data lines. I don't think they're going to bother with smaller folk out here that want to stream video. But if you're Google, yeah, is Comcast probably going to make you tithe a little to go through them? The answer is yes. But like I said, Netflix has done that a long time ago. They did that in 2014 or 2013, started putting these boxes in. So literally it didn't have to go across the internet. And if you ever wonder why movies only come out at certain times during the month from Netflix, it's because they're uploading those movies and deleting the olds off those boxes all over the United States. And once they get the app up or the movie up and uploaded, then it's okay. But of course, that's why they kind of, there's kind of like a handful of movies that show up across the month. I think they do that to keep people interested. The other reason is it just is a lot of data to send 3 or 4 or 5 gigabytes of data for each movie that comes out every day to these local boxes, and they just use a low volume stream to update those boxes. Okay, we got Cobalt, we got Netflix, we got any other questions? I love it. Somebody in the den says, I know it's a scam, but it's a tradable scam. And of course, that always makes me think of Mr. Soros, whose quote is emblazoned in my mind. All accounts of financial across history are one form of deceit and corruption. Your job as a investor is to get on when the fraud is being perpetrated and get off before it's discovered. But I always love that quote. I'll get it and actually read it here later. But I used to have it. I could just roll it off my tongue. So let's look at some other ones out here. As we said, not much movement so far in Netflix. You would think that they would be the most disturbed. But again, it's kind of one thing or another, no big deal. This thing's off its high. Of course, it's trying to go back into this big move down, which is the 29th of November, when it came down with 14 million shares. He didn't have much juice to begin with, about 6 million shares. But you're going to need to consolidate if you're on the bullish side of Netflix for a while. Of course, a little of this, I think, is Disney coming in and trying to horn in on Netflix, Hulu's, and Amazon Video's deal. Let's take a look at some other stocks that I wanted to look at. Where are my scans here? We'll look at some other ones out here. Certainly wanted to look at Goldman Sachs. A couple of candles up here look a little ominous. Yesterday, you had kind of a little reversal handle out here, but again, no continuation today. Yesterday, you had 3.5 million shares. Today, just 1.7 million shares. Didn't break the previous highs. Still in the trading range of the last 3 days, so there's nothing so far that's changed on that. Some of the other stocks that I wanted to see here still doing well is Netgear, the maker of internet routers. A lot of people buy these at Christmas. This thing tends to be pretty strong in the late part of the year. But you're going to get close to the volume you need. Let's go back a little bit farther. You break up here and you're looking at $57.10, the February 21st high. What's the other one? GWPH. I want to look at that one come back. The only legal marijuana stock. Second gap up of the 3 big gaps. So maybe one more gap coming from GW. We'll talk about that in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. One that's up higher today is GW Pharmaceuticals. They're the only company that has a license to make drugs from marijuana. They are based in Britain. GWPH is the symbol. I do like this as a setup for a three-gap play. You got the second gap now. If you were thinking this thing was going to top out, you certainly want to look at one more gap, because gaps of this size generally, you've got one here on the 7th of December, today, of course, on the 14th. Normally, these things come in three, so you're going to get one more gap. That would probably take you back up to the 137.88 October 7th high. So that's of 2016, by the way. So you certainly have that as a goal to shoot at. That's only about $6 higher or $7 higher. If I was in this, yes, Steve, I would hold on for 137.88. It's a virtual monopoly in that business, and my guess is that you will see 137 before the end of the year. So I don't see any better place to put your cash in or now. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can always post a message in the den. Okay, what else do we have happening here? I'll keep an eye on that. Wanted to look at a few things out here. This is what I want to look at. TLT for John, asking about the TLT. We'll take a look at it. Nothing's changed since I gave my opinion a few days ago. For me, this thing is in a trading range, which is about that half, or about 128.50 back to 122. We're at the very upper end of that range. Came down on the 11th of September with almost 18 million shares. Tried to get into it with 24 million shares, instantly reversed back on December 6th. Today we're up with 4.6 million shares. My guess is that we'll hover around this area probably into the end of the year. So no big reason to think that you want to go short on this. Another question comes in about Morgan Stanley. Let's get this down here a little bit more. Okay, is there anything? Well, you still haven't broken the uptrend from November 15th. You're kind of on that line now, so I don't see anything. You certainly are down on lighter volume, 5.2 million shares compared to the almost, 10.5 million shares yesterday. So certainly, if you're looking at this, you're pulling back on lighter volume. Yeah, I guess says, with options expiration, does us being down 8 points today or 9 points mean anything? And the answer is a little bit. Normally, you'll, if today's a down day, you'll close a little bit higher than Wednesday's close by a handful of points in the S&P. So I'm not going to be too surprised. My guess is that when we close, we're probably going to close like down 5 points on the S&P. We'll probably be up 8 points, making us maybe 3 points or 4 points higher in the S&P by the close tomorrow. But I don't know, a little negative news out here, but the market pretty much shaking it off with the retirement of the House Speaker. But other than that, I don't think a lot's going on. Another question out here is WDC. We've talked about this one a lot of times. Finally made its deal with Toshiba, or the remnants of Toshiba, and the Japanese government. Of course, this one's kind of gapped up. Same thing, though. You've got two nice gaps on the way up. I suspect you're going to get one more gap. Maybe that happens tomorrow. Maybe that happens next week. My guess is that they're going to slowly move this back up to about 88 bucks, maybe 89 bucks, and there would be one of the sweeter places to put on a short if you're thinking that way. STX, of course, is its sister. This one looks a little bit better, but they own their own memory component. They don't have to fight for memory. They'll always have somebody giving it to them. They'll probably license the design from somebody, but at least they don't have to stand in line when it comes to making memory-based SSDs for others. Although I think in the end, they're going to slowly be eaten up by the memory manufacturers themselves, Micron and the rest, and Intel. Seagate, of course, came down with some decent juice at 9 million shares back on June 27th. That 9 million shares pretty much got hit by 6.3 million shares 2 days ago. Yesterday, 4.5 million shares. Today, 1.7 million shares. So a lot of these things are kind of and fairly done. Now, this thing is a gappy little sucker. Let's look at a little longer time frame here. This is on 2 years. You've got this huge gap down. We're back up to the recent gap at $43, but there's yet another gap down that probably, if you wanted to look at shorting these, I think it's a less attractive stock to short than Western Digital. But you're looking at that 44.50 area from this gap down on April 26th. So I do think these things are weak. I think you got your pullback. If you're long this thing, I think you get 45, 46 bucks out of it. I think you're going to be in tall cotton, apparently. Okay, what else do we have? So we're off 9 points on the S&P cash. Volume still light, just 2.2 billion shares. We talked about Netgear. We talked about some of these other ones. Glue Mobile. This one actually trying to break out, didn't do so well today, but volume is there. You needed 6.2 million shares from the October 18th high of this year, $4.73. We spiked to $4.95 today. We're closing back into that trading range. You're going to probably pull back a little bit, take one more run at this stock. And of course, this one, kind of a Beanie Babies trading thing, but mobile games, it's kind of feast and famine. I don't follow it well enough to know exactly where that's at. Is this Barrick Gold? We brought this one up. Someone wants me to look at Barrick Gold. Again, I don't think that a lot is changed, but certainly the chart does not look bad. On this one, you tested the December 15th, 2016 low of $13.78, 37 million shares, got into it, broke below it, closed back above it, on December 7th with 11 million shares, so less than a third. This one looked like one of the stronger ones out here. And of course, a nice reversal pattern out here. You know, can this kind of meander out here? Is it instantly going to rip up to 18.5 bucks where this nice gap is? It's not, but my guess would be that more than likely the setup and the pullback is a slow stumble higher in prices, not a rip your eyelids off move that you had with something like Bitcoin. If we're going to move higher, I think you're just going to have a slow and kind of a stubborn move up in gold, especially for a while until anybody actually believes that a low has been made in gold. Certainly you have some good chart patterns out here, especially light volumes of tests of previous high volume lows. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
Got a little bit less. I think we're probably going to close about 5, maybe 4 points lower on the S&P on the day. We're off 8 right now. Again, triple witching tomorrow. We didn't have enough volume to make me think all the action's over for tomorrow. So could see some nice fireworks in expiration tomorrow. I've got a couple of white lightning plays, but going to be tough to see these things change a lot today. Probably going to have to go into tomorrow. You may even see the market kind of take a slow rise from about 11 o'clock on after options kind of lose their premium for Friday. So going to be a lot of action. Anyway, question in the den about applied optoelectronics. I like the chart pattern out here. You've got two big gaps down, which is the danger part of this. You got the first gap down on the 4th of August. You have the second gap down on the 13th of October. Could you get a third gap? The answer is yes. This is not acting, though, like it wants to gap down. The volume's light and the stock's just going sideways. When I was originally asked about this, I said I love the chart pattern. I like the light volume. What I didn't like was the timing. This stock looked to me like the timing was setting up a lot more like the 1st or 2nd of January when you wanted to play this. So I still love the chart pattern, and I love the light volume. I dislike the timing on this. Generally, if you're going to get a stock to run off the bottom, it doesn't happen halfway through December. It starts in the new year. And a lot of times when you see stocks going sideways at lows on light volume, that means that there's a buyer right underneath it. So we're probably seeing, if this thing doesn't fall off the side of the shelf here between the now and the end of the year, this thing's probably setting up for a move, but that move would be in January, maybe 3rd or 4th or 5th, not today. But I like the chart pattern. This is one to keep on your radar. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.